Noise! Bad noise!
5 minutes before critical mass.
Critical what? Okay, don't panic. Whatever problem this is, I'm sure they know how to handle it. Huh? Ah! It's my problem! We're doomed!
How's it going, everyone? Mario here. Thank you so much for tuning in. In this video, we're gonna go over what to expect from the markets leading into tomorrow's trading session. We have Federal Reserve's FOMC minutes dropping at 2 o'clock in the afternoon. That is something to keep an eye on. That is going to impact the market moves in a very big way. I'm also going to go over my speculations on what I think will happen leading into FOMC. If you're a beginner and you're asking me what the hell is FOMC, it stands for Federal Reserve Open Market Committee. This is nothing but an orgy which these Federal Reserve presidents have every once a month, suck each other off, and then tell us how much interest rates they're going to rise. In the last meeting, they increased the interest rates to 25 basis points. In this meeting, we're expecting them to increase interest rates to 50 basis points. So let's do a coin toss. At the end of the day, no one knows what's going to happen, unless you're one of those Federal Reserve presidents who knows the information beforehand and then buy calls or puts depending on the meeting results. There are two scenarios. Scenario 1 is them increasing the interest rates to 50 basis points as expected. Markets have already priced this in, so we rally. Scenario 2 is Fed pulling a fast one on us by increasing the interest rates to 75 basis points, fuck the economy up even further than they already did, and then tank the stock market. So basically what I'm saying is, we can either go up or go down. Well, there you have it, the best stock market channel out there, everybody. Leave a like, subscribe, join the Discord, join the Patreon, link is down below in the description. Jokes aside, I'm gonna let you guys inside my head. This is how I see it tomorrow. Federal Reserve comes out with a 50 basis point hike. This news will trigger a huge short covering rally in S&P 500 and Nasdaq. Don't get me wrong, we're not going anywhere near all-time highs, but what we are expecting is at least to form a lower high. I can be wrong, we can shit our beds tomorrow, and we can go down to fill the gap at 400 tomorrow. Anything can happen. But the most probable scenario is the one which I mentioned. So without further ado, let's get into the analysis of SPY, and we will also go over the trades which we took on Patreon in Apple and UPS. So let's go over the SPY and we'll compare it with the notes which we sent out today morning in Patreon and Discord and see if the price action respected the notes or not. Leading into today's session, I had two questions in my head. After yesterday's strong buying to the close, are we going to expect more bounce to the upside leading into Federal Reserve minutes tomorrow? Or they're going to pull the rug, flush it down, close it under 410, and then take us right in front of the Federal Reserve and take it from there? So these are the two questions which I had leading into today's open. So now let's go over the bull case and bear case and compare it with the price action. In the bull case, we clearly mentioned 410 was important. After yesterday's strong bounce of 405 with a huge volume indicates 405 is pretty important as well. If you were a bull leading into today's session, the number to keep an eye on was $410. Anything below 410 or closing candles below $410 takes the bull case off the window. In the notes we clearly mention, if we get a push higher, first level to watch out for is $416. Above 416, 4200 in ES will start acting as a magnet, which puts us at 420 in SPY. If we were a bull today, closing the day above 420 was a glorious thing to watch, because it opened doors for 420 to 50 and 425 to the upside. If we were a bear leading into today's session, bears need to capture 410. The candles closing below 410 open doors for running a test to 405 or filling the gap at $400. We didn't get to those numbers, but leading into tomorrow's session, especially with the Fed, these numbers are important. So we're looking at the 15-minute charts of SPY. we're going to go over the price action of what happened today. If you compare the notes with the charts, we have only given out two numbers in the notes, 416 and 420 up north. But over here, you can see four numbers. Two new numbers were 415.50 and 418 up north. We will explain why these two numbers are important. As the market opened at 9:30, the opening print was 415.07. As soon as the market opened, I sent out opening right below a strong resistance level. What could possibly go wrong? They got rejected, came all the way back down to run a test and found support exactly at 414.53, which was the highs of this candle on May 2nd, 2022. If you look at the price action of today, there were two pockets of ranges. One from 414.53 and 416, the other from 416 to $418. So for the first 2 hours, they didn't do anything. They were just floating around under $416, going back and forth, back and forth, back and forth between 414.50 and 416. And once they gathered enough energy, they burst through the 416 levels. Now, these 416s will be acting as a support. As soon as we broke 416, it opens doors for 418, which puts us in the vicinity of 4180 in ES. Why 418 is important? Because that's where we bounced off on April 28th. And that number comes in pretty important. So they did a floater operation until 2 o'clock from 416 to 418. And they couldn't break above 418. They got rejected. They lost 416, came all the way back down and found support exactly at the bottom of the range of the first pocket, which was at 414.52. They pushed higher in the last few minutes and they found resistance again at $418, got rejected back, and finally closed the day above 416, which is a pretty decent close. But leading into tomorrow with the Federal Reserve, does this even matter? Are they going to push it higher all the way to like 420 or 422.50? Or are they going to dump it all the way down below 410? That is something which is needed to be seen. Leading into today's trading session, along with SPY, we gave out the analysis for Apple as well. As Apple goes, so will the market. For today's session, I had one number and only one number on my mind, 157. If bulls can hold 157, that opened doors for running a test to the 200 SMA, which was at 159.40. We opened the candle at $158, got rejected immediately and went all the way back down, challenging 157. Below 157, opened store for running a test to 153. The opening candle trapped a lot of bears. It gave a low of 156.32. They pushed it right back higher and held 157. They came back to run a test to 157. As soon as they held this as support, it opened doors for running a test to 159.40 up north. What did they do? They came back, ran a test to 157, and then pushed higher all the way back up to 159.41. And then they did a floater operation for a while and went all the way to challenge the big fat round number at 160. What was the target which we had for Apple for today? Holding 157 opens door for Apple to test the big fat round number at 160. They went to challenge 160. They couldn't close above it, but guess what number they closed above? The 200 SMA, which was at 159.44. Leading into tomorrow's session, if Apple can break above the highs of today, which was at 160.70, we can easily run a test to $163 up north. So this is what I'll be watching. 157 still remains an important number for Apple. Above 157, opens door for running a test to 160. Above 160, opens door for 163. As soon as Apple hit 159.40, I told the members of the Discord to reduce their exposure on the call contracts because that is a pretty important level of resistance. Today's close was pretty decent, so let's see. Depends on what the Fed says tomorrow. We can either run a test to 163 or challenge the 50 SMA, which was at 155.42. So if you guys enjoyed the video, leave a like, subscribe, go ahead, check out the Discord, check out the Patreon. Link is down below in the description. Thank you so much for tuning in. See you guys in the next one.
Please, sarap Sarap pakai